I just hate when people say, oh no, like Debifi, it's a multi-sig, TradeFi doesn't work like that. Is it? I mean, well, I'm gonna take it personally, I'm gonna prove you wrong.
Archie. Max Kei, welcome.
Thank you. Thank you. It's a pleasure to be here.
It was a deep sigh. We're both in Prague right now, and it's a hectic schedule. I've been considering what your introduction is going to be, so I might as well just leave it up to you. Tell us a little bit about yourself, who you are, and what you do.
Yeah, my name is Max. I'm a Bitcoiner. That's the best part, probably. Yeah, I'm CEO and founder of Debifi, which is a new project. Well, it's 12 months old. It's a platform for institutional capital providers to go and lend money using Bitcoin as a collateral for Bitcoiners, basically. So we try to close the gap between banks and traditional finance companies that have a lot of liquidity and Bitcoiners that doesn't want to sell. Obviously, that's the reason you want to find a utility from Bitcoin. And we want to bring all liquidity to the Bitcoin-backed lending. That's number one. Number two, I'm a contributor to HODL, which is now becoming, it's actually already the largest peer-to-peer trading and lending platform, Bitcoin-only trading and lending platform in the world. And I also founded Baltic Honey Badger, which is like one of the conferences out there.
Well, it's not one of the conferences. It's a pretty unique conference in the sense that it's a Northern European conference. There's a particular culture and ethic about Northern Europe that is especially congruent with Bitcoin ethos and value. So it's not just a conference. I think it's quite a special conference. I'm looking forward to going for the first time.
We like to use the term the most OG Bitcoin conference in the world because we started in 2017, literally in the basement in the city center of Riga. It was like a crazy, I think it was a crazy venture, but it turned off a huge success for us and for Latvia and for Riga because it's a small country. Some of the speakers who were flying first time to Riga, they were like asking some other people who lived in Riga, like, should I go there? Is it safe there? These guys like Adam Beck is going there. What's happening? Because at that time when we started in 2017, it was all about blockchain, ICO, how blockchain is good, Bitcoin is bad. And we decided, we need to do something else. We need to do Bitcoin only event. There was before that Bitcoin only event, but I think that Honey Badger kind of set an example on its own. Because if you can bring in Latvia, like 300 people, mostly coming from abroad, and speakers at the first conference, it was Andreas Antonopoulos, it was Adam Beck, Elizabeth Stark, Giacomo, Peter Todd, Eric Lombroso. So it was like very, very powerful line of speakers. Then something is there. And I know that a lot of conferences that exist at the moment, they took an example from Honey Badger, and we were kind of inspiration. And that's I'm really happy for that.
Looking for a secure, trusted way to buy, sell, and hold Bitcoin? Gemini has been leading the way since 2014. Founded by the Winklevoss twins to be a security-first, fully regulated Bitcoin platform. With Gemini, your Bitcoin is protected with enterprise-grade security, backed by insurance and Type 2 certifications for SOC 1 and SOC 2. Whether you're new to Bitcoin or a long-time hodler, Gemini gives you the tools to stack sats and build generational wealth your way. From simple one-tap buys to advanced charts and trading features, it's all here. Buy, sell, and hold securely. That's Gemini. Gemini. Bitcoin with confidence. Need cash without selling your Bitcoin? With Debifi, you borrow against your Bitcoin, non-custodial, multi-sig escrow, and you keep your keys. No banks, no selling, just institutional grade liquidity with terms up to 2 years and APRs as low as 9%. All transactions are signed using private keys on your own device. Using a 3 of 4 multi-sig setup, 3 out of 4 keys must approve every transaction, giving you control, transparency, and peace of mind. Whether you're a hodler, miner, small business, or treasury team, Debifi gives you the cash you need now without giving up your Bitcoin upside or triggering a taxable event. Get liquidity, keep exposure, and stay secure. That's Debifi. Debifi, your Bitcoin, your money.
Were you surprised at the willingness of so many people, very prominent names, to make their way over?
Yeah, that was like a moment that like Bitcoin community is different. You know, there's no ego. Well, there is ego, of course, but you know, it's like very humble people, and it was like there's a story about Andreas that I was thinking how to reach out to him, and then I just went to his website. There was like a contact form. I filled in. I said like, we're doing the conference in Riga. Can you come? 10 minutes later, I have an answer to my email. I was like, you just need to ask, you know.
That's something that I think a lot of people overlook when they're trying to get something started or get in contact with people. Like, for example, I left my DMs open on Twitter.
Yeah.
Well past the point where I had more than 1 million followers, right? And apart from scammers, you know how many DMs I got? Hardly any. Like people approaching me to connect, or even just say, hey, you know, I like your account or anything. Hardly any DMs. And I know that a lot of people are trying to get attention and partner with people, but it's like zero agency, zero initiative. I'm like, okay, you can just reach out to people.
A lot of people, I think, overthink so many things. It's just pretty much simple. You just need to try and just do things sometimes.
The worst that can happen is they say no, or they don't even reply. And
nothing changed. You're still on like square one. So it's good. It's all good. I mean, you don't lose anything. Just try.
You said that I'm particularly interested in the conference and success from the get-go, because I think it's a reflection of what I was saying before, that there is a particular affinity between that part of Europe, not just Latvia, but sort of Northern Europe, and the Bitcoin ethos and values. Where do you think that stems from?
I would say it's not about Northern Europe. I mean, I like when people say that Latvia is part of Northern Europe, but actually we're kind of like Eastern Europe.
Still Eastern?
Yeah, it's like depends on which side. You know, we like to say Northern Europe because it sounds like more. And it is.
It sounds less Soviet.
Geographically, it is.
Yeah.
But then if you take Baltics, it's like Eastern Europe and it's like post-Soviet Union. So I think that a lot of people from post-Soviet Union countries in Eastern Europe, they like Bitcoin and they're into Bitcoin due to the fact that they have been through a lot of turbulence in their time, because there was like socialism, there was like uncertainty when Soviet Union went off, and you know, like as I said before the interview, by the time I turned 20 in my country, there was currency change was happening 4 times.
Like a currency reset?
No, it's changed like completely. Like you're
from one to another, from one kind of.
Yeah, we had ruble, then we had lats, then we had another version of or ruble, then another version, then we have Latvian lats, and now it's euro. And the only smooth sailing was moving from lats to euro because it was like fixed exchange rate. Everything else was a mess.
What happened to savings in the other?
You just lose them. That's it.
Completely wiped out.
Yep. Especially first time when Soviet Union like broke. There was people who were like stacking rubles all their life, and then one day you wake up and it's gone. That's it.
And so like we've got Bitcoin now, right? But in terms of what did people learn from that, and how did they try to mitigate the risk of that happening again after sort of the iron wall fell?
Still, you know, there's like there was way less education, and we didn't have that system based on free market and et cetera, et cetera. So it's really hard to expect from people who are like, you're in your 40s, you were in one country and you wake up early in the morning and you are in another country. And again, don't get me wrong, I think that like end of Soviet Union was an amazing thing, especially for my country, for Latvia. But it's really hard for people who were living in one system to change on the go. There was like a lot of successful examples, but it was like chaos on the most parts of the Soviet Union, because you were living in like socialists, planned economy, where you have a plan that Communist Party will go once in a while and say, next 5 years we're going to produce this and that and this and that. And now you're like in the free market conditions, and it's basically Wild West out there. So, and you don't have savings culture, you don't have anything, so you just need to figure it out how to survive. It was very tough for a lot of people. I'm actually, looking back, I'm really happy that I was small, like a young kid, and I didn't went through that, because I just cannot imagine how it's like. It's like completely changing your system of beliefs, environment where you are, which is, again, it's not necessarily a bad thing. It was a good thing, but it was painful for a lot of people. And I saw, as an example from my family, that there was different parts. Some people found an opportunity in that, and some people just, they just gave up.
Quite literally.
Like, yeah, you were like a big boss a year ago. Now you're just cannot find yourself anymore, because you were thriving in certain system. You were relying a lot on the government, because like government would think about you. That was the mantra. You can have a job, you will finish your university, or you don't need to go to university. You can go straight to like factory or whatever. And then at some point, you need to become like sovereign individual. You need to think you don't rely on government and on the state anymore. You need to rely on yourself. And there was like a lot of people who just lost trust, and they didn't have any drive power to like any power, mental, physical, to continue. And there was like a lot of bad examples as well.
So who were the first people to make the most of the newfound freedom in a more open market and a more open system?
These were the people who had certain power in the previous system. They had access to certain stuff, and they were the first to, not all of them, again, it was like, I would say it was 50-50, but these people were like making money, and a lot of them become like very wealthy. And of course, like criminal elements, like there was a lot of that stuff back in the days. But that's a logical step in evolution. When one system breaks, you have this, as I said, Wild West. People are like trying to find out, and sometimes like some people understand the language of power, and some people just want to use that power, both physical and mental power, in order to achieve something. That was crazy. Crazy times. And again, I'm happy that I was a little kid.
Which sectors did the underworld sort of predominate, and which sectors did the previous power base, say, for example, the Communist Party seniors, where did they sort of find
production? Mostly like production, because you understand that, like production. There was like new money and new entrepreneurs. They were more into like banks and finance, because again, it was a new concept, like private property. I can open my own bank. Like there was a lot of that stuff, and we had a lot of Ponzi schemes running around, because you have a huge amount of population that is uneducated. And they're lost. They don't understand what to do. You can basically sell them a lot of stuff. So there was a lot of scammers as well.
Can you give us an example of a
Yeah, there was like a
scheme.
I'm going to open a bank. I'm going to promise you huge interest rates. Just go and put money in the bank, and I'm basically not going to manage your money. I'm just going to spend on my own like goods and et cetera, et cetera. So we had a lot of that type of cases, when banks was just bankrupt, and people coming to the doors to the bank trying to get their money, and there's nothing, because like the owners of the bank just spend it on their own things, or there was like mismanaging the funds. There was a lot of that.
It was quite common.
Yeah.
I guess when you have such a chaotic transition from one system to the other, the new system, just because in name it might say we're free markets and whatever, it doesn't mean that they have the legislative, regulatory controls in place, and even the people who are in positions that look appropriate for their responsibility, they may not necessarily be fulfilling those responsibilities either.
I think Baltics were like exception from all the post-Soviet Union countries, because we were like, I think that the first 3 countries like Lithuania, Latvia, and Estonia who did pretty well. Also because like we have closer ties with the Western world, so there was a lot of help. But again, it was a painful transition for a lot of people. And then pretty much fast we went from one union to another union. So it was Soviet Union. There was a time when there was like free Latvia and free Estonia free. And now we are part of European Union, which is a completely different thing, of course, and it's really good for our countries. But
was there an enthusiasm from the people to join the European Union?
Yes,
there was.
I mean, like we always thought that we are actually part of European family. I mean, like Western family rather than Eastern one. But it's a very tricky thing, because there's still like we take a lot from both worlds, and which is good, I believe. But there was always perception, even in Soviet Union, when there was like Iron Curtain and people could not leave the Soviet Union. If you want to have this feeling of like how it is living in the Western society, as a person who lived in Soviet Union, you go for vacation to Latvia or Lithuania or Estonia. It was always a bit different than other parts of the Soviet Union. And so we were always like more aligning ourselves with the Western community.
Why was that part of the Soviet Union allowed to have that more Western orientation from a cultural point of view?
Because it wasn't like a Western orientation. It still was like, no, we have this ideology, communism. But it was also like, I think that they wanted to show that we're also like following the steps of, we have Latvia, Estonia, and Lithuania. You come to Soviet Union, we're not like savages, or we have some good parts, and these are like you go to Riga and you enjoy it. And it's like similar to Prague or a lot of Central European cities.
And I guess that's you've taken us through the 90s and what it was like there, and then I'm guessing that with the internet boom, that was kind of a new lease of life for the younger generation like yourself coming up.
Yes,
as a kind of opportunity to develop things independent of the system, or perhaps
I think internet is like it's an opportunity for everyone globally to develop something new and be outside of the system, and like Bitcoin proving that. I mean, I have a theory of. I don't think I figured it out, but maybe I heard something and then it's just stuck in my brain that we've been through multiple revolution, like technological revolution. First, it was like internet, which is like informational revolution, which now that you don't need to, you can have any information in the world that you want. Basically just tapping some buttons and you can go and learn about a lot of stuff. Because previously information was kind of like monopolized by like newspapers, so they can feed you information that they believe it's a good for functional society. That was like the part of Soviet Union as well, right? And that's why a lot of countries that have certain level of dictatorship, they ban internet or they filter the sources of internet, And then there was a second revolution, which was like communicational revolution, which means that there's no more monopoly on operators who used to connect you in order to reach out to the person on the another part of the world. Now I can just call you through WhatsApp, Telegram, Signal. It's for free. Basically, I just need Wi-Fi. I don't need even card, mobile card. I just need a functional mobile phone, and I can or laptop, and I can call you. And we're going through the third phase, which is like monetary revolution, which is Bitcoin. And where there's a saying, a good one, that we were born too late to explore the earth and seas, and too early to explore the space, but just in time to fix the money. And I think that's what we're doing at the moment. So it kind of works like that. And a lot of people, again, I was pretty young when internet started, and there was like some successful businesses and some success stories in Baltics, especially if we're talking about Estonia. They have like an amazing amount of different startups, and they have a very strong startup culture. Like Skype is from Estonia, Bolt is from Estonia, TransferWise, which is Wise, is from Estonia. There's a lot of very successful big projects from Estonia, and it's a small country, very small country.
So why do you think that is?
I don't know, maybe because they're close to Finland, and Finland also have a very strong startup ecosystem. And there's a lot of famous internet companies coming from Finland. Maybe because of that, maybe there's other factors. I didn't research that because, like, I think that I live in echo chamber, focusing only on.
Did I have especially good broadband communications infrastructure that enables
They
all
improve
of that?
a lot of aspects, like regulation. They have this e-residency thing. You can open a company pretty much easily. There's a lot of accelerators. There's a lot of support. It's like I think from Baltic states, Estonia is the best in terms of like the best country in terms of digital age and everything that goes with digital.
And how is Latvia? How close is it to replicating that?
Kind of. We have some successful companies. We have some good examples. But we definitely have less unicorns than they have. And part of that because our economy was also based, parts of our economy were based after the Soviet Union broke. We were mostly into logistics because we had a lot of seaports and that stuff. And also financial system, banks. At some point, Latvia had a lot of banks that was serving a lot of capital from post-Soviet Union countries. So we were into that. And Lithuania, which is the third country, they were more into production, like producing goods. They're still into that. Also, like very successful country. So 3 Baltic states, they're different. We call ourselves culturally, we call ourselves brothers, but in terms of economy structure, I think we're pretty much different. So, but yeah, I mean, the funny thing going to the Baltic honey badger is that Latvian Bitcoin community is very small. So more than 90% of people going to Baltic honey badger every year is not from Latvia.
Where did they come from?
US, Europe, Australia, Latin America, Japan, New Zealand, all parts of the world. Mostly, of course, Europe, because it's like 3 to 4 hour flight. But we have a lot of people coming from other continents and way far than Europe.
That's really interesting because you've obviously built something special for people who come from faraway places. For a Bitcoin conference, it must mean something particularly special to them. Are your marketing activities in particular targeting?
No.
It's just organic growth.
It's just organic growth. We were just we were just crazy lucky. It was just a leap of faith in 2017. We just did that, and then we had kind of first mover advantage, and everyone liked it. It was like a fresh air for many Bitcoiners, wow, we can just go and talk about Bitcoin. It's like Bitcoin only. There's no shit coins. It's only about Bitcoin.
Well, that's an interesting point that more and more people are making to me in private, of course. And I mean, I don't really go to conferences, right? I like to connect with people sort of on the sidelines, but I have an aversion to conferences from my corporate life. I just never really got into it, right? But I love connecting with people in and around, for example, the city, like in Prague. And I'm really grateful that people take the time to have a chat with me, actually, and to meet up with me, because, a lot of people don't know who I am. There's no personal connection. And it's only now, now that we've published 5 or 6 episodes, people are starting to understand there's a person behind this brand. And hopefully we can get more and more conversations. But I've been to the Prague conference 2 or 3 years ago. I went there, attended, and so this will be like my second actual conference attending in person. And I'm sort of not hesitant, a little bit anxious about what it's going to be like now that I've doxed and being in the public domain.
It's going to be very relaxed. I mean, Honey Badger is small, very intimate conference and people who are going there, like I would say 60% of the people that are going there every year. So there's a lot of visitors, honey badgers who are like regulars there. So it's we keep the amount of people on purpose below 1,000, because we believe that it's like a border when you're getting too big, and then there's like you cannot talk with everyone, you cannot interact with everyone. But like a lot, like at our conference, everyone minds their own business. And nobody's running around and trying to get your attention or do something like that. So it's very chilled. A lot of people say it's like a large meetup.
So 2017 till now,
yeah.
What are the changes that you see? Because there are people like me now in the Bitcoin space. I consider myself not an early adopter, an early part of the early majority, because I think we're well and truly in the mainstream sort of adoption phase. And so mid to late 2020, I was watching the Bitcoin chart, looking for an entry price to get in, because at that point I wasn't orange pilled. I was really just looking for a trade, right? Because I'd seen the previous 2 market cycles, and I'm like, if it doesn't die after 2017, after hitting $20,000, I'm like, if it doesn't die in the next bear market, I'm not going to miss the next market cycle. And so it's like late 2020, I was just looking for a trade. Within 6 weeks of first buying Bitcoin, I was literally all in, like my entire net worth was all into Bitcoin. And then gradually became more and more orange pilled. But I'm fascinated because you were one of the earlier adopters of Bitcoin, and especially the conference give you such huge exposure to the culture. Yeah. How do you think that's changed since then?
Well, in 2017, we were like talking mostly about technology. There was less about how you actually apply Bitcoin to like TradeFi or finance world, or definitely we weren't talking about Bitcoin Treasury companies.
Yeah.
Nobody was talking about ETFs and like banks, and everyone was talking about like technology. There was more talks about like freedom. It was more cyberpunk stuff, right? It was closer to that. I think 2019 we already saw that there's already mass adoption happening. People are going to Bitcoin not only because of technology, and still freedom and private property are cornerstones of Bitcoin, but people were coming with different ideas. There were more and more different stuff happening. Lightning was already kind of maturing to some extent. And then after COVID, it was we already have to change our content, because we do understand that people want to talk not only about tech, they want to talk about other stuff.
Like the implementation of technology.
Yeah, how you can do things differently with Bitcoin, how you can improve the existing system, how the system that will build. I think it's like more about how we're going to reach mass adoption and hyperbitcoinization. So I think we're moving, even as a honey badger, we still try to stick with those like roots that we have, but it's like harder and harder and harder, because we still have cypherpunk stage, by the way, on honey badger, which is not recorded. So we have some interesting talks, but I think it's an evolution, Bitcoin becoming more mainstream, and obviously you want to talk about more mainstream application. Like in Prague and in Vegas, there was a lot of talks about Bitcoin Treasury companies, which is like, it's just happening, We're moving there. In 2 years, it's going to be different. There's still like tech talks, of course. Now it's more like layer 2, what we can build on top of Bitcoin, how we can scale this stuff. And back in the days, it was mostly like about Bitcoin, Lightning as well. So it was more cypherpunkish, which is not necessarily bad or good. It's just like, again, it's an evolution of the things.
I think some people look at that change in culture in a kind of wistful way.
Yeah, there's a lot of people who don't accept that, which I respect.
Yeah,
and I still believe there's like Bitcoin, but Bitcoin doesn't care. It doesn't give a fuck. Sorry.
No, we can talk.
About your opinion, and if you don't like that, that's the purpose. I mean, your enemies will be able to use Bitcoin. People that you disagree will be able to use Bitcoin, and you use Bitcoin.
Well, I'm glad you said that, right? Because my experience of the sort of people who say those sorts of things online, typically they use Bitcoin doesn't care as a means of dismissing an opinion that they disagree with. Yeah. But the moment something happens within the space that they don't like, and someone throws that back at them, they throw a tantrum, of course, but they have an inability to actually digest their own advice, especially the fact that Bitcoin is money for enemies. So we're seeing certain entities accumulate a lot of Bitcoin, and a lot of people have objections to that, but ultimately there's nothing you can do about it.
Yeah, nothing you can do. Yeah. Again, what you can do, I mean, if you don't like something, well, that's your issue. I mean, I think it's important to mind your own business in a way. Like, what are you gonna do to stop someone buying like thousands of Bitcoin or hundreds of Bitcoin every week and putting on the balance sheet of their company? Nothing.
There's a kind of virtue signaling in people objecting to a BlackRock or a strategy accumulating a lot of Bitcoin. Yeah. Why do you think they're doing that then?
I mean, there's two spectrums on one side and on another side. There are like people who are financially engineering Bitcoin, and that's completely fine. I mean, strategy is highly successful business, and if you look at the history, Michael was like pioneer, and you need to give him a credit for what he's done, literally. And the same people who are objecting now, they were talking about mass adoption and, hyperbitcoinization. How are you going to reach that? I mean, you're not going to reach that by building some crazy stuff. And, I do believe that we need to improve privacy, confidentiality, anonymity. We need to allow non-KYC purchases. We need to spread Bitcoin in emerging markets. This is what we've been doing with HODL. I do believe in that. But I also believe that if we were talking all these years about how hyperbitcoinization is going to happen, for me, hyperbitcoinization is that I go to any financial institution in the world, to any bank, and I go to them and they ask me like, what assets do you have? And I say, I have Bitcoin, and they will be more than happy to serve me. And I will be able to get a loan. I will be able to do everything, just like with regular money or regular assets that are there. That's the hyperbitcoinization. But it's not necessarily excludes that people in Latin America, Africa, Southeast Asia will be able to use Bitcoin as well, and be protected from government coming in and taking their money, hard-earned money, through inflation, through money printing, or through, oppression and something like that. That doesn't exclude that. There's different use cases. I mean, there's still like developed countries and developing countries. And if you will compare developed countries, for many developed countries, Bitcoin is an asset, and for many developing countries, it's money. There's a saving culture in developed countries because basically we're fat cats who were privileged to be born in, less about me, but more about others, who are privileged to be born in stable countries and, with culture of saving, with certain culture of spending. And there's people who are less privileged, who are born in countries where you need to survive. And for them, Bitcoin is a tool to survive. And there will be two extreme. Always there will be people who will be using Bitcoin in a way that you don't like and you like. So that's it. Just sleep with that. Mind your own business, build your own tools. You want to be fully like anonymous, you have tools. If you want to be fully open, you have tools. That's the beauty of Bitcoin. It's very flexible. It allows you to be fully transparent, and it allows you to be almost fully confidential. That's the one of the greatest features of Bitcoin that a lot of people doesn't understand. It allows you be a corporate who is like making a lot of money, sourcing a lot of liquidity from unstable or ineffective capital markets. And it also allows you to be sovereign individual, building your own stack and minding your own business and not relying on the government support or whatever happens in the world. It's for everyone. That's the beauty of Bitcoin.
In 2017 and up until the point where, I guess you're saying in 2019, you felt that the early majority was starting to adopt, the mainstream adoption of Bitcoin had started. What were the projections of what hyper-Bitcoinization would look like in 2017, 18, or even earlier perhaps? Because there seems to be a lot of people are reacting to the reality of what hyper-Bitcoinization is starting to look like.
Yeah.
But what were the expectations anyway?
It was mostly about there will be no banks. We're just going to do our thing. Bitcoin will be accepted everywhere. Payments will be flying, which is happening, by the way. Like Square is, for example, they announced that they're going to enable all their merchants in US to accept Lightning. So it's happening, but it was mostly about, we're going to banks will be bankrupt and will become obsolete. And, that kind of thing. I never actually believed that banks will bankrupt. I had another angle. I think that banks will effectively become infrastructure provider for Bitcoin companies because you still need a fiat in one way or another. Even if we say that, okay, there will be not fiat, but it will be stable coins, which kind of proving now, and it's like growing adoption. Still great. I mean, stablecoin is still fiat, but it's like just a better version of it. It allows for peer-to-peer transaction, which is amazing.
Technologically better.
Technologically
for transaction
better,
purposes.
faster. Again, in many ways, you avoid middlemen, of course. Especially stablecoins built on top of Bitcoin, like liquid-based Tether, or now Tether announced that they're going to do Lightning, which is amazing. And so that's kind of where we're moving. And I never believed that banks will be obsolete. I think that there will be just some of the banks will embrace digital assets, in particular Bitcoin. This is what's happening in Switzerland, for example, where we are with our project Debifi. In Switzerland, I'll give you an example. For example, if you arrive to Zug, you go out from the station and there will be a cantonal bank, which is like a local bank, and there will be a huge banner saying like, you have Bitcoin, come to us, open a bank account. We'll be happy to serve you. And there's a lot of banks in Switzerland that accept Bitcoin. They provide different type of services. You can custody Bitcoin with them. You can buy, sell. You can borrow against Bitcoin through Swiss banks. And I think Switzerland is like setting a great example, and it's just going to spread. So back in the days, it was like, remove the banks, everyone is going to be their own bank, which is still the case. I mean, you still can be, and you are with Bitcoin, your own bank. But I mean, removing the banks, it's like, I don't think it's going to happen. They're just going to adopt, which is great.
That's what I thought. They would always co-opt Bitcoin before it would threaten their viability.
Because the more adoption, the more banks embrace, the more TradeFi embrace, the better it is for all of us. Because at some point it will be just peer-to-peer, everyone will be accepting Bitcoin and there will be no difference, right? This is what we're trying to achieve.
But what do you think about those people who think actually bank-facilitated Bitcoin services are a perversion of the initial vision or the original vision?
They have a point. I mean, if you look at the white paper, it's like peer-to-peer electronic cash, which is peer-to-peer. Mm-hmm. But it still could be like peer-to-peer because when you're sending Bitcoin, you're not sending Bitcoin through the bank. You're still using the Bitcoin blockchain. You're sending it through that. And it's still like, you can be outside of the banking system with Bitcoin, or you can be inside the banking system with Bitcoin. That's, again, optionality. There will be always people who will like the more private, independent approach, and there will be always people who will prefer relying on someone. That's just how it goes. You need to accept that. You don't need to fight these fights, like, no, we should. I think I'm here to save your vision of Bitcoin and I'm going to make it that. No, like, embrace different views and just mind your own business and do your own stuff. That's it.
Not everybody's fighting the state.
The market will decide.
Yeah.
If market will decide not in your favor, that's how it goes.
I think a lot of people underestimate the value of utility and convenience in using third parties. There is a reason why our current financial industries and infrastructure are set up the way they are. It's because over time they have presented themselves in a way that has some value for most people. But obviously there have been blind spots and deleterious effects of that as well. And Bitcoin helps rectify that and it gives us options. I'm a proponent of self-custody.
Of course.
Totally. But I fully respect the rights of others to use solutions that suit them.
We just need to build tools that are easier to use and better from terms of custody, right? We need to build like self-custodial wallets. There are already plenty of them, actually. It's also nonsense when people say, well, self-custody is really hard. It's not. It's actually really easy. It's not that hard.
I think the user experience and interface, it's not a question of difficulty. It's a question of having too much friction.
I wouldn't agree with that. There's like less and less friction every year. And again, comparing to 2017 with now, there's like variety of tools that making anything like basic self-custody, multi-sig, hardware wallets that are making your life very easy and they're very user-friendly. And I think just a lot of people just stuck in that 2017, 2018, and it's just easier for them to continue like the same mantra that they've been using for years and years. And of course, there will be people who will rely on custody, and there will be people who will rely on self-custody. And what we can do as proponents of self-custody, or in my case, we're big fans and we're building all our solutions on top of non-custodial approach. We can just build better tools, we can educate, and we can try to onboard as many people to the like non-custodial setup, which is like, again, the core idea of Bitcoin, self-custody, peer-to-peer, avoid the middleman. But again, there will be people, and that's like that's a natural evolution. Everyone starts with something. First, it's like an account on centralized exchange. Then at some point you educate yourself and you understand that it's safer probably to move money to like a wallet of your own. Then you think that, okay, I have a wallet of my own, which is a hot wallet, maybe on my mobile phone or on my laptop. I need to buy a hardware wallet. You buy a hardware wallet. Then at some point you decide, oh, I want to borrow against my Bitcoin, or I want to buy more Bitcoin, but I want to do it like in non-custodial fashion to get more security. And you start researching. That's a very natural path of evolution. But there will be always people who they're fine with custodial stuff, and that's it. I mean, I do understand that I need to say and preach non-custodial thing, which I do constantly, but I'm just accepting that there are custodial businesses. They have good faith, good ethics. They want to do good, and that's the way how we onboard more people, because it's easier.
It does feel like there are some people within this space who would almost rather people don't buy Bitcoin rather than buy Bitcoin and leave it with a custodian. You know, there's that kind of an objection to it.
No, I mean, I totally agree that self-custody is the end game, basically. Self-custody, it's hugely crucial and important. And if you will look at the recent statistics that, like, I think more than 50% of Bitcoin are self-custody.
Oh, is that right?
Yeah.
Okay.
I think River recently released research that 55% are self-custody, which is great. I
would have thought it would be less, to be honest. I thought it was less. But, you know, anecdotally, we see...
there's also dynamics that there's like less and less Bitcoin on exchange. You know, the people are taking them to self-custody, which is great and it's amazing and it's happening. But if you want actually help this movement, educate people. Don't push your own, like educate, build tools, and it's going to happen naturally. You always need to have an entry point. And for some people, it's like trading. For some people, it's stable coins. From some people, it's altcoins. Some people just do it through custody. But it's already at the beginning of the journey. You know, it's already good. It doesn't matter how people get on board in Bitcoin if they end up with the Bitcoin. You know, that's the end game.
I totally agree with you. Let's talk about orange pilling. It's one of my favorite topics. And I think I've raised that with almost every guest. So like when someone expresses an interest in Bitcoin to you, they're not a Bitcoiner.
Yeah.
How do you start convincing them or orange pilling them?
I'm not a technical person, so I cannot, you know, convince through like technical approach. So I usually say about the most important thing that are important for me. Again, like private property. This is something that you own, and if you hold your keys, this is something that belongs to you. That's a crucial thing because, again, of history, of like country and place where I am, like background, historical background, like government and state, they were like taking money away through multiple different tools.
So that's an acute sort of need in your part of the world? Okay.
Well, it was. I think it still is everywhere, in every part of the world. Like private property is like, and the Bitcoin is like crown jewel of private property. It's like the most private property in the world. I know that's just like, it's the thing that you can actually own. It's not real estate because it could be taken, not your bank account. Even if you have safe deposit box where you store your gold bars, it could be taken. With Bitcoin, it's really hard to do that, especially if you take all the necessary measures to avoid that, right? So private property, number one, decentralization, number two, as a network, as a base layer. I mean, there's a lot of centralized service providers on top of Bitcoin, but Bitcoin itself is decentralized. It's the most decentralized thing in the world.
Can we elaborate on that? Because, you know, decentralization is one of the key virtues of Bitcoin, right?
Yeah.
Key properties. And then, okay, that's the base layer.
Yeah.
Is it necessary for subsequent layers?
I don't think that there's a possibility for subsequent layers to achieve that level of decentralization of Bitcoin.
Because I see a lot of people in the discourse on a timeline with the expectation that actually every subsequent layer has to reflect all the same properties of Bitcoin. I'm like, well, that would just impose the same restrictions on every subsequent layer. We will not get additional functionality, etc. I mean, that's my thinking as a non-technical person, as someone relatively new. You know, this is my 5th year in the space, so I don't immerse myself in the technical arguments because I just feel like that would be LARPing on my part.
Same for me.
Conceptually, when I think about what Bitcoin is on the base layer and the limitations that make it so beautifully Bitcoin, I don't see a need for subsequent layers to replicate that exact structure. I think for various reasons there has to be some kind of variability in order to introduce new functionality, right?
I mean, it's good if they can, but I don't think it's possible, to be honest, because it's like Bitcoin has a very beautiful like game theory. You have like miners, users, node runners, stakeholders, largest holders. You have like different parts of the community, and this is what we saw when there was like block size war. You know, whatever you think that Bitcoin should be, it's probably it might not happen. Whatever resources you have, it's like Bitcoin survived multiple different attacks, and so far it's been very good. I mean, very resilient. So I don't think that it's possible to achieve that level of decentralization as the base layer has. And I mean, I'm happy if someone will be able to do that. And I'm sure maybe as not technical savvy person, there might be tools that actually achieve that already. I just don't know about them, or just cannot remember about them. But there's always like some kind of, point where you can press in order to like leverage in order to understand that, hey, it's not decentralized. Even you saying, oh, we built decentralized protocol, we're just going to release that. You're developers of this. That's like a pressure point. Mm-hmm. So it's not kind of decentralized. That's why I like what I love about Bitcoin. Another thing is that nobody knows who Satoshi Nakamoto is. That was very like bright move, and there's no this leverage in terms of if like government or three-letter agencies will know who is Satoshi Nakamoto, they might try to do something, and he just removed this.
So. And I really like the, I guess, emerging cultural consensus that it not only doesn't matter anymore, but stop trying to find who it is. It's just not on, to put that onto people who are still alive and public figures to undertake this sort of investigative analysis that makes accusations. It puts an enormous amount of pressure on people, even if they're already public figures, many of whom are not really actively in the public domain. I just think it's really, it's not on. It's not on at all.
Yeah, but there's like a lot of people, different motivation, everyone wants to get a piece of fame or do something, so.
It's true. So from the external point of view, the general media, we can't really do anything about that. But I find it particularly distasteful when there are people within our industry who do that, because they should know better.
Yeah, that's also kind of becoming like, I had a conversation yesterday, that's like becoming the biggest mystery of the century, who is Satoshi Nakamoto. And people will continue, within or outside or inside of our industry, they will continue to search for the answers, which is like, okay, again, nobody cares. But I also believe it's a very stupid thing to do. But
I think it's irresponsible, actually.
Yeah, but there's a curiosity in everyone, and some put their curiosity in building necessary or useful tools, or researching some useful stuff, and some just do other things. So it's just, again, you just need to accept that.
You mentioned Bitcoin has survived numerous attacks. I mean, the two most famous ones in my mind were the Mt. Gox hack and then the block size was?
I would say also it was like kind of not related to Bitcoin, but also FTX and BlockFi and Celsius and all this like bankruptcies, huge bankruptcies, the recent one. I don't think it was Luna and Terra. I don't think it was like attack on purpose. Same way as like Mt. Gox wasn't probably attack on purpose.
But let's talk about FTX, and we'll go into any of that that you want. But FTX was a particularly interesting situation because here's this guy who comes out of nowhere, literally, right? I know he's got a backstory with Jane Street as some kind of intern or analyst or whatever. But where the hell did they get their money from to start up this exchange? I don't know what that backstory is. I haven't read anything that clearly details where they came from with a huge amount of money to start an exchange like that.
Well, the public story that I read, that he was like at the beginning, he was arbitraging between
the kimchi premium, right?
Yeah.
But there's no evidence of that. It sounds like a whole lot of bullshit.
You know, my approach towards a lot of things happening, it's like, I generally don't care because I'm a builder. I like to build stuff. And I think that constantly debating on Twitter about how it should be, it's just a massive distraction.
Mm-hmm.
I mean, I like to build things. If you look at my Twitter, I don't post quite oftenly. First of all, because I don't think that my thoughts are somehow very much interesting and useful. They're probably people who are like more thoughtful and they have brighter thoughts than I do. But secondly, I just don't find an urge to, try to engage in some conversation, in some drama. There's already enough drama without me, so let it be there. So with FTX, I didn't research that much. I was just following closely the end game, the end, like
the collapse,
the collapse
of it, yeah.
And again, we're already there with our products, with HODL, which is like non-custodial, and there's no custody, and that just proved that our theory and hypothesis was right all the way. What makes me a bit, what disappoints me a bit, that after everything that happened with FTX, Celsius, BlockFi, and after everything that people experienced, that not very pleasant things, and lost a lot of money, every cycle we're going back and there's like something appearing, there's still like, and again, we've been touching on that topic, custodial, non-custodial, but in particular with the lending, that's like my field of interest. I see that, we go in another like bull cycle, and there's like, again, custodial service providers or kind of non-custodial service providers that say they're non-custodial, but in the end they are kind of custodial, and there's more and more appearing in every cycle, and people I see how they are repeating the same mistakes all over again, maybe at the smaller scale, because again, there was an unpleasant experience with in 2022, but still that what makes me a bit depressed. But again, what I can do about it, I just can build better tools and, in future, onboard more and more people to our products.
The bit that raises particular suspicion for me, not only just that shady background, the backstory that doesn't quite really make sense to me, is the political affiliations as well. And then once after the collapse and the arrest happened, this concerted effort to whitewash his entire reputation and to manage the process.
Yeah.
And it looked to me like the system was fighting to save his reputation and to make and to build up a public perception that would make it feasible for some kind of bargain plea deal. Thankfully, that didn't happen.
Yeah.
But it definitely looked like something clicked, kicked into gear, and the machine was starting to operate, And I thought that was a really curious thing to see in action, because we really only see that kind of manufacturing consent around really large political decisions about geopolitics, like war, for example. And I hadn't really seen that reaction, that kind of engaging of the troops, like the establishment rallying around one particular person to save him when he was so obviously a crook, obviously a crook. And I said previously about Saylor, how I'd interviewed him on Spaces. That was one of the instances where, FTX had collapsed and it was just carnage on the markets, right? A timeline, and he was really responsive. I pinged him. He said, "Yep, okay, let's have a chat." And he made no bones about what he thought about FTX and what they did. Diabolical was a very strong word that he used numerous times to describe what they were doing, because it was an outright fraud, right? And the media tried to portray him as some kind of unlucky guy who just got caught out and whatever. And what about all the philanthropy that he was doing, and who's going to do that good work now? And I just thought, this is really interesting. I've never seen this happen around any figure in this space, especially in the context of how much antipathy they had towards anything crypto, let alone Bitcoin, and how, FUD is a term that we obviously use, and it's basically came out of what the mainstream media does with any story regarding Bitcoin, is spin it into some kind of negative. But they went out of their way to project this guy as some kind of savior when he had perpetrated the most diabolical fraud in the space to date. Probably the only thing that comes closer to two others of his epoch, which was the Luna Terra collapse and also the Celsius collapse as well. And it's like, why are they protecting this guy? Was he their guy? And given the huge amount of the political donations, I'm just like, well, what's going on there? And that casts even more suspicion on his backstory as a result of that. Whereas before I wasn't particularly interested in his backstory, and I should have been. And the reason why I'm going on about this is they had me fooled. I thought they were a legitimate exchange. I really thought they were.
Everyone thought about this. They were like, I remember they sponsored Super Bowl before the collapse, and it was like, wow, dude was on the cover of Forbes magazine, which now we clearly understand it's not like, it doesn't mean anything, because there was multiple people who were on the cover of the Forbes magazine. But it was just, everyone had this perception.
The Forbes 30 under 30 pipeline to jail, as the meme goes, is undefeated. It's a very strong indicator of future fraud. Anyway, I don't think I have gotten over the fact that I was fooled by it. Even though I thought he was a bit of a distasteful person, right? Like his braggadocious sort of nature and pushing his philanthropy, I thought, that's a bit suspicious. But as an organization, as a commercial thing, I thought they were legit. And I haven't forgiven myself for falling for it.
A lot of people thought about it. And a lot of people were like also pretty amazed. And I was amazed by this success story, how he went from like in 2-3 years, it's become like one of the largest, and they were doing some interesting stuff. And a lot of people were like that. So a lot of people lost money with them. So it's like, it's even worse. So that's kind of weird, but at that point, and even now, it's pretty easy to fool. If you have certain level of resources, and so I think part of this was again, everything was growing. It was bull market. There was like everything is pumping. And when everything is good, you just avoid being rational sometimes. Sometimes you need to stop for a moment and like, okay, let's think about it. This is also one of the things that I'm a bit concerned about treasury companies. Obviously, because I speak with a lot of people, and there's more and more people who are like saying, there's a certain signs of a bubble forming. But again, I'm not into treasury companies. I don't follow them. I don't have time. Maybe I'm stupid, and maybe like they're right and I'm wrong. And I don't have any strong opinion against or for treasury companies. I think that it's a very exciting development, and I truly think that there's a very interesting examples. But I'm just not into that yet.
There are definitely signs of growing interest in that space. I'm not yet sure that it is approaching the scale that I would call a bubble.
Yeah.
And I think something similar to the structure of Bitcoin ETFs will probably prevail in that space as well, where we have the top one or two, like Grayscale obviously has a huge legacy position and their outflows have kind of plateaued. But then BlackRock just dominating. BlackRock, Fidelity, and Bitwise doing quite well as well. Yeah. And it might be a fourth that I'm forgetting that looks at a viable scale as well. But then there's a long tail of like 5, 6, 7, 8, 9, 10.
I mean, again, there's like my issue with treasury companies is that there's a lot of companies that are trying to exploit this playbook, and they're doing it in a very weird way, like doing an announcement of announcements, like, hey, my stocks are like falling down and we're on the verge of bankruptcy, but then, you know, they go out and they say, we're going to buy sometimes in the future $1 billion worth of Bitcoin. And, you know, they're trying this to do this not because they're convinced that Bitcoin is a great asset to have on the balance sheet, which it is. It's the best asset you can have. They're just trying to save their business, and they literally don't care about Bitcoin. If it would be not Bitcoin, they would say something else. So a lot of companies trying to exploit that stuff.
I picked up on that as well as someone who scans the news constantly.
Yeah.
And I think a lot of the attention is directed towards Michael Saylor's company's strategy, and I think that's misguided. I don't think the risk is with MicroStrategy or strategy. I don't think that's where the risk is. I think Michael has proven to be a disciplined operator with huge conviction through one bear market where the company's MNAV went negative. They didn't sell. They kept buying at a reduced amount because, you know, the financing appetite was diminished in the market. But then as markets recovered and that returned, I think, you know, we've seen the scale of what his ambition is now.
Yeah.
And I don't think anyone questions his conviction or his discipline or the competence of his corporate finance function either. I think his team have pioneered something quite novel. And it's tapping into what he said, the fixed income market is like, I don't know, 100, 200 trillion or whatever it is. And his stated ambition is, well, I want 2 trillion of that. Now, we don't know the timeline it would take for that amount of money to flow into Bitcoin and whether or not they will even capture all of that. But there's definitely a possibility that will flow into vehicles similar to what Michael and his team have pioneered with strategy. My question is, okay, Metaplanet seems pretty disciplined and well-run operation. So does Eric Semler's company, Semler Scientific, right? I spoke to him the other day. He's an incredibly impressive man as well. He was a hugely accomplished sort of career as an investor as well. So those two companies, given what I said about Metaplanet and Semler Scientific, about their competence, they are still relatively new and they haven't proven themselves through a bear market, right? But putting that aside, my real concern is the long tail of companies that are going to flood into this space.
Yeah, that's what I'm trying to, you know, to tell you that I don't doubt MicroStrategy and a bunch of other companies, which are there already. They have everything, and there probably will be newcomers who are also pretty much structured and they do understand what they're doing. I just think there will be plenty of company that are mismanaged, and there will be some of the some things that will be happening. And as with any panic on the stock market. It could be just one small company bankrupted, something went wrong, and then it's like a domino effect. It goes through across the sector.
I think that's inevitable. That's going to happen.
Yeah.
So I don't think we can avoid some companies in the long tail amongst the Bitcoin Treasury companies going broke because they're going to be greedy or through inexperience, incompetence, and they're going to blow up. I don't doubt that. And then what I think will happen is that's going to invite further scrutiny on other companies that might be a little bit bigger. And short sellers, just like in the last cycle, will enter the fray. And they will start generating FUD. They will start hopping onto Bloomberg and, CNBC, telling their stories, because in a bear market, fear sells, right?
Yeah.
Fear mongering also sells. And they will have no shortage of opportunities to amplify their messaging. And then in an environment where fear is a predominant emotion, I think the market and people in general will not really care about the reality of a company's balance sheet and their viability. They will be trading on the perception. And I think we saw that in the last cycle, where despite the fact that all of MicroStrategy at the time, their debt being like 5-6 years, zero margin call, people were still saying, what is their liquidation point? There is no liquidation point. There's no, you know what I mean? But it just kept persisting and persisting, despite the fact that, I would post evidence of it. Michael would also, he also came out and said that in podcasts and tweets. It still persisted until the Bitcoin price stabilized and then bounced back and then just faded into the background. And again, I think something similar is going to play out.
Of course. It's just a cycle, But I think that in the end, like every company will become a Bitcoin Treasury company, not as a business, but as just a hedge against everything that's happening in fiat world.
It will be part of their treasury operations. They will have some allocation to Bitcoin.
It's not necessarily going to be like a strategy that we're building inside a company, to attract more capital. It's just the way how to build a healthy business. You can still do your thing, whatever you do, you manufacture or whatever, but you need to have some healthy assets on the balance sheet. And I don't think like fiat-based assets are healthy, because we see what's happening with money printing, inflation, et cetera, et cetera. So in the end, I think every company will embrace Bitcoin, and those who will not, they will just fade away.
Well, I agree with you. Like, it's almost like allocations to Bitcoin have become kind of mundane now, and it's really only newsworthy when a notable company does it, because that in and of itself makes it news. The fact if a Microsoft or an Apple or something does that. But now we're seeing just a huge number of companies saying, yep, we bought 500,000, press release. It's not necessarily material to their operations, but it's an allocation, and they make a press release or a statement to the SEC. And I think that's where we want to be, right? We want to see more of that. And so I think we're almost there. The question of bubbles, I'm not sure we're there yet, because...
Well, it's, again, I said it's not a bubble yet. It's there, but there are signs of bubble. I mean...
Of a bubble forming, They're the beginnings of
Again, I'm very bad analyst, because I'm just, again, like build stuff, and, I have certain long-term vision. And I always think like 3, 4, 5 years in advance. But I think there's like signs of bubble forming. Again, not because of the big companies or companies that are already operating on the market, but because like there's a lot of companies who doesn't understand Bitcoin, who doesn't understand the value proposition of Bitcoin, and they're just exploiting this hype or success stories of other companies in order to save themselves and or pump their price. That's the issue.
Let's talk about Debifi, because this is a lending platform for institutions.
Yeah. We accept only institutional lenders. And the goal is that we want to provide a infrastructure for any company in the world to start to become basically Bitcoin-backed lender, to start providing liquidity to private individuals who have Bitcoin, to treasury companies who have Bitcoin on the balance sheet. So we're purely focusing on tech. We're building infrastructure that you can easily plug and play. Basically, in 1-2 weeks, you can become a lender on the Bitcoin loan markets.
So who are your borrowers then?
Private individuals.
So anyone can borrow,
companies.
but the lending aspect of it particularly is targeting institutions who want to use the Bitcoin
companies.
as collateral.
Yeah. So we onboard only companies, institutions that have approval or they have a permission to provide Bitcoin-backed lending. Some of them do only like business loans, which is less regulated. Some of them have licenses. Some of them are regulated in a way. Some of them are structured in a way, but it's always have to be a company that are allowed to provide loans. And then on the other side, we market our product to wider Bitcoin community. And people are coming to us. But the best thing that we do is that everything is non-custodial. So we build that infrastructure so that it's appealing to the borrowers, to Bitcoiners, because I think a lot of Bitcoiners, they embrace the non-custodial part of the Bitcoin, that you can borrow against your Bitcoin but still hold one of the keys in a quorum. So that's very important. And again, all the things with Celsius, BlockFi, FTX that prove that there's a demand for non-custodial products. Again, there will be still a huge part of custodial lenders. They will be highly successful and they will perform well, but it's just our thing. We want to build non-custodial solutions because we believe it's like aligned with Bitcoin ethos. And honestly, we believe that at some point there will be custodial lenders who will come to us and they will say, okay, we want to add this optionality to our users. So Debifi we're not like competing actually with custodial lenders. We're actually allowing them to offer a new feature to their customers. We did a very interesting research a year ago. We've asked a very simple question to Bitcoiners. We've approached 300 Bitcoiners, and we asked a very simple question, which was, you have two options. One option is you custody your Bitcoin and borrow against them, and you take a loan with 8% interest rate per year, or you don't custody your Bitcoin. You borrow through multisig, but you pay 11%. More than 80% of Bitcoiners that we approached said that they are happy to overpay, but they want to have an extra level of security and transparency. So we believe that maybe now it's not a case because there's a lot of custodial services, but we believe that at some point in the future there will be more and more businesses and Bitcoiners using non-custodial stuff. And actually we are working with some of the largest TradeFi companies at the moment, and it's gonna happen at some point this year. We're gonna do some big announcements, and everyone's gonna see that even if you have custodial and loan products, nothing stops you to providing just extra service for your customers and using us as an infrastructure provider. Because again, we've been in this business of building non-custodial multi-sig based solution, both for trading and lending, for more than 6 years. We've been doing this in a very user-friendly way that people doesn't actually understand their custody or they're using multisig. And we are not competing, we're just providing an extra optionality, an extra feature for your company.
So you're both a retail-facing business with respect to borrowers, but also institutional level infrastructure that they can plug in to your platform and provide that to their customers as well.
Yeah.
That's incredibly exciting.
Yeah, that's incredibly exciting. There's a long way to go, of course, because we're just 2 days ago we've been officially out of beta after like a bit more than a year of operation, testing out. We started with just 2 lenders, and now we have more than 40 different lenders, which some of them are operating on the public offer list that we have, and some of them just we know they're onboarded, and if we have some requests that are coming to us, we just can connect them through our platform with the borrowers. So yeah, it's like institutional supply and both retail and institutional demand.
So how's the pricing for loans work? Is there some kind of market-based floating mechanism, or is it something that you guys...
No, it's a free market. Every lender has their own cost of capital.
Mm-hmm.
We have some lenders who can do 9% loan, 9% interest rate, and we have some lenders who are doing 16 or 70%. So it's a free market. And if you're a lender who doesn't have a cheap cost of capital, well, yeah, it could be issue that the borrowers will choose other lenders. So you need to perform a bit better. You need to look for cheap capital, but it's a free market. We don't set any rates. It's just when you're onboarded, we give full flexibility to our lenders. You can post your offers with any interest rate you want, any currency that we support, any LTV ratio, any term, whatever you want, any size. So it's up to you. I mean, if you see that the market, if you have cheap cost of capital, you go there and obviously you will be in high demand. If you don't have cheap cost of capital, there are other ways how to perform a bit better. But I mean, it's competition. This is what we're building. We're kind of building institutional peer-to-peer, It's like marketplace for everyone. We want to build it in like largest liquidity aggregator in the world for Bitcoin-backed loans.
And which currencies are the loans available in?
At the moment, it's obviously stable coins, USDT, which is the most popular, USDC, and fiat currencies like Euro, Swiss francs, US dollars, GBP, and some others like Brazilian reais and dirham. But it also depends on the lenders that we have. So, for example, if you go to Marketplace now, you won't see Euro or USD based offers because the lenders that used to provide them, they're out of liquidity and when boarding new ones. So it's always changing. I mean, it's not fixed level of supply, It's sometimes it could be like all currencies available because there are lenders who provide loans in all currencies. Sometimes it could be other currencies available, some currencies not available. So it's always changing, especially as we grow. We envision that at some point in like 12 months, there will be all currency available on a constant basis because we will have a critical mass of liquidity providers. At the moment, we still have this growing pains because we onboard more and more, and it's currently mostly small, mid-size liquidity providers. But as I said, we're already going to onboard large-size liquidity providers who will have a capacity to provide different size of loans for different duration and for cheap cost of capital in different currencies.
And the geographies in which you operate, they reflect the currencies in which it's available?
They basically reflect the lenders that we onboard and which countries they can serve.
Okay, so
it's up to
GBP loans. That means that the UK is operational.
Yeah.
It's available for people in the UK.
Yeah.
I can borrow there. Okay, that's really cool. Are you going to do some mortgage-related finance as well, specifically? Are you developing any products in that space?
At the moment, we are focusing purely on like standard, very basic, like you go, you lock in Bitcoin as a collateral, you get money, and then you spend whatever you want to spend it. Whether it's like buying more Bitcoin, buying a car, buying a house, paying for whatever you need to pay, right? We are releasing a new product which will be called Debifi cards. I was
just about to ask you about that. I'm glad you said you're reading my mind. Sorry, I interrupted you.
So it's like microloans on the go through mobile phone. We are going to partner with the Bitcoin company. They have prepaid cards. So you will be able to post
What's the Bitcoin company? I haven't heard of them.
The Bitcoin company. They're issuing prepaid cards.
Okay.
That's their business.
All right, I haven't heard of them.
Yeah, Ben is an amazing guy. I mean,
where are they based?
Very smart. In US.
Okay.
So basically the idea is that you can download an app and on the go you can borrow like a small amount of money. You still lock your collateral in a multisig, so it's like same level of security. But it's like on the go, easy to do. It's basically very fast. Micro-lending. Then we are going to partner with a company called Bitrefill.
Yes, I've heard of them.
I'm sure you're familiar with them. They have a regular cards in Europe for European Union. And we're gonna, like, if you have a Bitrefill account or a card, you will be able to borrow on Debifi, and our liquidity provider will top up your Bitrefill account. So it's like works like a Bitcoin-backed credit cards. So again, it's a technical stuff. It's an infrastructure for lenders to do micro lending, just in a way of payment cards, you know. So this is what we're gonna do. That's the next step. And then we're building API for the reasons that I mentioned to you. So you can like plug and play. You already can operate as a service provider, as a liquidity provider on Debifi. We just want to build API that will allow you to integrate Debifi in your system. We already have like most of the parts of it ready, so it should be released pretty much soon. And regarding the mortgage, it's a very appealing field of business, but the problem is that real estate is regulated differently in different countries. So it's, in my opinion, it's a bit hard to scale this stuff. I mean, it's different regulation, and if you mix up Bitcoin, which is a super highly liquid stuff, you know, transparent, programmable, with something like real estate, which is like illiquid, it's complicated. I know that there are companies that are doing this and planning to release this product, but we are taking like, it's, you know, I have my personal view is that building products and releasing them on the market, it's not a sprint, it's a marathon. You know, if you want a good product, especially in the lending space, you need to be highly conservative, because it's a very conservative space. And this is why we're building on top of multisig, because it's like old technology. It's very easy to explain this technology to liquidity providers, super secure. We've been also open sourcing our tools, going through multiple security audits. My approach is that in Bitcoin lending, you need to be conservative. We saw what happened already with those who were less conservative. They were making money, sure. They were all around Twitter and internet, but we saw how this ended up, you know. So yeah, sometimes we see like people complaining, oh, your loans are expensive, you don't have enough supply. Maybe at the moment, yes, because we're kind of new. But we're solving this issue, and at some point in the future there will be highly liquid markets on Debifi, and you will be able to do whatever you want to do with your Bitcoin.
Yeah, I think Jack Mallers had quite a lot of feedback on his on his lending service as well, regarding pricing and product structure and all the rest of that. But the important thing is it's starting.
Yeah,
right?
I mean, I totally disagree, and I don't like what also a lot of you know, people on Twitter, like, you know, they're releasing a new product, they're building it, there's like iteration, one phase, phase two, phase three. Of course you make mistakes. I mean, if you don't make mistakes, you don't evolve. And when there's so much hate, you know, Jack is solving a great problem for many, many people. Again, it's a custodial lending, but as I said, there will be people who will be using custodial lending. There will be people who are using non-custodial lending. We saw that a lot of people who are users of custodial lending, they use both approaches. They use custodial and non-custodial lending. There are people who are going from custodial first to non-custodial, same way as with self-custody. You start with buying through Coinbase or Kraken, and you keep your Bitcoin there. Then you start think, okay, maybe there are risks. You start educate yourself, and then you move to like hot wallet, and then the end game is like multi-sig, hardware wallet, cold storage, all these things. So it's an evolution, and I think I really don't like when you release a product and there's a lot of criticism from people who never did anything useful.
Because it's not yet perfect on the
it's
first iteration.
It's not yet perfect, or because they believe it should be different. If you believe it's different, go and build your own. I mean, if you're so like, I do understand you need to respect the opinion of users, and we listen, and Jack is listening as well. He proved with multiple interaction for the very short amount of time that you can improve significantly, and I'm sure it's going to be a banger. But I mean, I just don't understand. People are building stuff there. They're doing all the heavy lifting.
It's the tone of language used, the approach.
Yeah.
That if something's not perfect, you're a scammer.
No, I mean,
and I just think it's over the top.
I mean, you can provide a feedback, and there was a lot of valuable feedback, regarding replication, terms of services, regarding all that stuff. Sure, and the other side is listening, and they're changing, and they're improving. Same with us, a lot of people, they're like giving the feedback, but the feedback can be given in different ways. It could be rational, or it could be just crazy trolling posts on Twitter, which of course it can like drive you crazy sometimes, especially if you want to listen to the people. But it's actually the same way that we experienced with Baltic Honey Badger. There was a lot of people who were saying it's not going to work. And, it's like, it's a risk. You take that risk. And with HODL as well. When HODL was launched, there was local Bitcoins on the market. There was Paxful on the market, which still is, by the way. But, there was like these big giant companies doing peer-to-peer trade, and everyone was, are you crazy? There's already like enough of this stuff. Like 6 years later, local Bitcoins is non-existent anymore. And, HODL is just growing. And same way with Debifi, when we were launching, we still hear a lot of things that people are saying, oh no, TradeFi doesn't work like that. No, like banks are not going to hold their keys, You guys are Bitcoiners. 5 years ago, 10 years ago, I heard the same thing when I was like researching Bitcoin. People used to say, money doesn't work like that. And we have, as a community, we've proven that it's like that. When Michael Saylor was launching his venture into like Bitcoin Treasury, I'm sure there was a lot of skepticism and people saying it's going to blow up, and it doesn't work. Like treasury companies doesn't work like that. 5 years in the making, highly liquid asset entering top 100 in US, growing and like crushing it. So I'm more disappointed when I hear from people who are Bitcoiners, who has been through multiple cycles, who has been innovators, even innovators in the way that they at some point had balls to buy Bitcoin and just hold it, to spend their money or time to educate. I just hate when we as a community, we're still very small and we need to support each other. And I just hate when people say, oh no, like Debifi, it's a multi-sig, TradeFi doesn't work like that. Is it? I mean, well, I'm going to take it personally. I'm going to prove you wrong. It's going to take time, of course, a lot of effort, but eventually it's going to happen.
I think if the demand is there, it will be facilitated, right? Capital will flow, borrowers will flock to the product. Yeah. And hopefully it gets to a point where enough people find the pricing and the product structures appealing. I mean, we definitely need to see a more liquid market for borrowing products.
Yeah, but there's a certain level of delusion that I constantly hear on the Twitter, that people are saying, oh, the rates are high, Bitcoin is a super collateral, it's the most pristine collateral out there, you should give me money with 2% interest rate. Why? I mean, it's a free market. And a lot of lenders who are in Bitcoin lending space, they're actually Bitcoiners. So for them, it's always a question, should I allocate capital into Bitcoin-backed lending and get a fiat yield with, let's say, 10%, 12%? Or should I just buy Bitcoin and hold and it's going to make me like 20%, 25, 30%? So it's a cost of opportunity.
Mm-hmm.
And if you're thinking that, oh, we're going to have Bitcoin-backed loans with 3-4% interest rates, maybe at some point in the future, but not now. Now the average interest rate on the market is like 12%. Both custodial, non-custodial lenders.
My ideal scenario is I want to unlock the power of my Bitcoin collateral to buy a property, to buy a house. Yeah. I don't want to sell my Bitcoin to buy a house. Yeah. And I'm not really looking to borrow anything until that point.
Yeah.
Really. I mean, I may, but I'm not looking for it at the moment. How far away do you think we are from the point where using your Bitcoin as collateral will get you an interest rate on a mortgage that is similar to what's available to cash-backed mortgage loans? I mean, it doesn't have to be the same. I just want it to be close.
I mean, close depends on, define close. It's 2 basis points, 3 basis points. I mean, what is the mortgage rate now?
I actually haven't looked, so I don't know what the mortgage rates are
let's say it's 3%. If it's 3%, then I would say like Bitcoin-backed lending could be 6%.
At the moment? Or into the future it could reach that level?
5-6%.
Yeah.
Into the future.
That's not bad to me.
I mean,
that's pretty good.
We already see that there's like cost of capital in different regions are pretty much, it's different. We already see, like we saw on our platform, there has been lenders and loans provided with 9% interest rate, which is already single digit. There are some big loans happening for large volume loans that can be 8%.
Mm-hmm.
There are banks in the world who already do Bitcoin-backed lending and they can do 8%. They can do even 7-6%, but just in different currency, right? I think gradually we will be there. Maybe if things will evolve without any particular, downtrends, maybe in like next 12 months, we will see more and more single-digit loans. But I don't expect that we will see like anything close to mortgage rates anytime soon. I mean, like in the next like 24 months.
Yeah.
Because again, as I said, there's also a thing that I call a cost of opportunity.
Mm-hmm.
And think about it. I mean, a lot of people say, I just go and sell my Bitcoin and I'm not going to borrow with like 10%, 12%, double-digit interest rates. And then you ask yourself, like, okay, you're going to sell your Bitcoin. First of all, it's capital gain tax in many countries. Not in any country, but in many countries. In many countries, it's capital gain tax. And with borrowing, you can avoid that. Again, in many countries, not in all countries, but you can avoid that. But the most important thing is that you are losing uptrend of the Bitcoin price.
Mm-hmm.
You're going to sell now, but maybe your asset is going to double in price in the next 12 months. So if you're borrowing now at, let's say, 12, 13, 40%, and if Bitcoin is going to double in price in the next 12 months, then you're just going to keep yourself 86% of the uptrend.
Yep.
And that's the cost of opportunity. And if you think in that terms, then rates are making pretty much reasonable thing. I mean,
I think you're right. And also, if you are borrowing to buy a house, for example, and you're able to retain ownership of your Bitcoin, you're actually doubling your exposure to a rising market.
Yeah.
Right. Especially if you buy property well.
I mean, we are not liquidity providers, and I would love to have on Debifi 5%, 6% interest rate, which would just mean more business for me. But I also understand the other side. I mean, sometimes I look at the Bitcoin space and think, wow, we're actually living in an echo chamber. People think, okay, it's a super collateral. It is. It's 24/7 liquid, transparent, programmable, decentralized, scarce. It's not going to be more than a certain amount of Bitcoin. But I mean, there's other part of equation. There's business. Again, there's lenders, and they don't care. Some of them just don't care about properties of Bitcoin. They just see that you care about Bitcoin and you are happy to overpay not to get part away with your Bitcoin. And that's it. That's a business. That's a free market. The more lenders we will onboard to Debifi and in general into ecosystem, the more big banks will enter. Of course, there will be suppression on the rates, and they will go lower. And those who cannot get cheaper capital, they will probably fail or stop doing this. But that's the beauty of what we're building, because we don't care what's the cost of your capital. If you think that you can be competitive with like double digit, go on. We can provide you with the solution. If you have single digit, fine. We're happy for that. You'll have a lot of business through us.
I know you're the platform, like you've said a couple of times. You're not the liquidity provider. You're not the actual lender. But what kind of loan-to-value ratios are available or on offer at the moment?
For fiat, we currently have 50% LTV. But again, we onboard different lenders, and sometimes if it's like a private offer, they say, hey, we want to be more conservative or we want to be more aggressive. So there's basically no particular number. We just have by default 50%, and for stablecoins it's between 30% and 70%. You can choose. But you can choose like basically for any currency. So we have some lenders who are coming to us and saying, okay, we want to have like 30% LTV ratio for fiat because we're highly conservative. Or there are borrowers who are coming to us and saying, hey, I want to totally exclude the liquidation event. So I want to borrow and please make my LTV ratio 30%. Which means that they're locking, like, let's say 10 million worth of Bitcoin to borrow 3 million worth of fiat or stable coins. There are different types of borrowers and lenders, but the goal of Debifi is to provide full flexibility in terms of how you want to structure your loan portfolio and what kind of offer you want to provide to the market.
So it's interesting with banks, especially in the UK, but also some banks in the US. I know that's the hostilities thawing out in the United States under the current Trump administration, but in the United Kingdom, there's still quite a bit of hostility towards anything to do with Bitcoin, really. Yeah. I'm interested in your liquidity providers, like which parts of the finance industry are they from? Are they banks? Are you seeing an appetite increasing from banks?
We see appetites increasing from banks, but at the moment it's mostly like family offices, hedge funds, private companies, non-banking loan providers, because they have more flexibility, less regulated, more flexible. They can provide, for example, business-to-business loan with no particular permission, or they can do a lot of different stuff. Banks are more regulated, obviously, and of course they're cautious, but there's like more forward-thinking banks which we are collaborating with, and I mean it's only a matter of time when you're going to hear from us that, hey, there's like banks coming in. I think that also the beauty of the lending is that that's the business that banks understand better than anything else. Lending is what started the more modern banking industry, because it started, I think, the modern banking industry started in 14th century in Italy, maybe even a bit earlier, when the entrepreneurs who traveled to other countries to buy some stuff then went back to Italy to sell it. They had to have a credit line or some extra capital. And that's how the bank industry kick-started in the modern era. So banks, lending is their core business. And some talks that we're having is like, we don't want to touch Bitcoin, but we can use it as a collateral. I mean, we can provide loans against Bitcoin because it's still loan. I mean, there's an asset, and we're happy with that. It's a highly liquid asset.
I was reading about, we don't have to name them, but certain technology companies who have significant amounts of cash outside the United States, particularly in Europe, for example, who are engaging in corporate finance, lending to other businesses as well. Has there been any kind of interest from them to utilize their cash with your platform?
Well, first of all, I don't know about which companies you're talking, but...
Well, let's just consider that they're extremely large technology companies with enormous cash balances.
We're talking with different technology companies with enormous cash balances, and some of them are doing certain size of the loans, and they're not there yet. I mean, in a way that they are too big for us, and they don't. A lot of companies in this space, they want you to have a certain track record. And we're only 12 months in a space. And there's also has to be a first movers in the space. So I don't think that we're in talks with a lot of companies, including those who have enormous amount of money. And it's happening, it's going. Maybe we're onboarding less wealthy companies, but I mean, as the market will grow, as the demand will grow, we envision that even the biggest companies will, one way or another, will be onboarded to non-custodial setup, because you can just provide optionality. This is what I've been trying to preach. You don't need to focus purely on non-custodial loans. You can do your stuff, you can use this platform, and you can just use us. And there will be always a people and companies, especially if we're talking about companies that have Bitcoin in treasuries. A lot of them, I've been talking with them, a lot of them come to us and saying we want to borrow, but we're never gonna go the custodial way. Never. Whatever the proof of reserves you provide to us, whatever licensing you provide, we're just not going to do that. It's too much risk for us. And again, there will be a lot of companies who just want to fast access for liquidity, and they will use whatever there is in the market, and that's fine. That's just the market.
I've developed a theory that 2 bear markets and you can call yourself an OG now in Bitcoin sense. Not in the sort of folklore sense of Bitcoin's history, but you've kind of earned your status in Bitcoin then, and you've earned all the future gains. You're not lucky. You didn't just, as I did, I bought just at the start of a parabolic run, and then my fingers were burnt in the bear market that followed that. But we're well and truly into a bull market run now. And the market structure that's been, I guess, shaped on the chart now is 2.5 years of a fairly consistent march upwards, but without any sense of euphoria. Anytime, I think we've had 3 bursts of price appreciation and then really long 6 to 9 month periods of consolidation.
Yeah.
Can you how do you interpret that in the market? Do you think that this can persist? Do you think it's a reflection of the change of investor entering the space?
I'm a really, really bad analyst, but the reason why there was euphoria before that, because we were just testing the waters, basically. Bitcoin was, but it still is an experiment. And it's it's like when the entrepreneur, they say it's really hard to earn your first million, but then it just go. So I think for Bitcoin, it was really hard to reach certain benchmark, 10,000. I remember it was wow, 10,000. And then at some point, maybe when we passed now we passed 100,000, and everyone 100,000.
It does feel that way. There's no sense of excitement.
There's no excitement at all. I mean, I think that we kind of lost excitement somewhere between 50 and 100K.
Yeah, I
think like that.
Yeah,
because I remember the last bull market when we reached 69, it was Wow, 69.
I think there was an expectation that there was going to be a blow-off top.
Yeah, and now you're asking people, what's your price prediction? And everyone is saying, it's going to be 150,000. And you're like, 150,000? Why? And even double, like 200, still people are not as excited, I think that's the case. You can also compare it like when you're like, if you have a kid, first steps, when the kid does first steps, it's like huge excitement, and then it's just walks, runs, jumps, and there's less excitement for that. Start performing like a normal human being. So, I mean, I think that I'm still a bit concerned about, maybe it's consolidation, right? But it's like we've been 6 months, like basically flat line in terms of price, although there's a lot of positive developments and news coming in, including like the current US administration, including a lot of companies doing the Treasury, a lot of this stuff. I think it's highly positive for Bitcoin, just a proof of concept work, and that there is something. It's becoming less of experiment and more like a standard playbook for many people and companies. I just don't like giving price predictions. I mean, as I said, I'm a builder, and I like bear markets a bit more. I know a lot of people will hate me for that, because it's like a bit more calmer to build during the bear market. There's no rush. There's no like, we need to do this today or yesterday because there's like a demand for a new thing. You build consistently. There's a consistency. It's like with athlete, every professional pro player, sportsman, they always say about consistency. You need to work hard. And that also applies to the businesses, entrepreneurs, and especially Bitcoiners. You need to work hard step by step. Maybe someone is running faster now, but if you will keep doing your thing, you have a vision, you will achieve and you will prevail.
It's interesting you say that, because in the last bull market, I saw a number of instances of Bitcoin companies, for example, that were rivals, taking very different approaches to growing.
Yeah.
Some were very much in sprint mode. Yeah. And others were like, we need to get fundamentals right, focus on that. And the brand building will come as a result of continued excellence and reliability. And I think through the cycle, the second company proved to have had the right strategy.
Yeah. I mean, look at, there's an example, look at the Tether. They have been building consistently their company for 10 years. Mm-hmm. And it's only last 12 months or last 24 months that everyone is talking about Tether, and suddenly everyone understands how unique, profitable, and great business this is and how powerful they are. Yeah, but they've been consistent 10 years building through multiple
and they've
risks.
Been under fire all that time, all the fire, right? Yes. Like one of the dominant FUD things has been Tether, right?
And there's a lot of highly successful businesses and companies in Bitcoin space now that has been slowly, consistently building day to day, whether it's a bear market, bull market, whether they're under attack, whether people appreciate them, don't appreciate them. You just continue doing your thing. That's a low time preference in Bitcoin, You can rush and maybe you will be lucky and maybe you will perform well, but I mean, build the fundamentals. This is what we did also. I'm sorry to shill again Debifi to some extent, but this is what we did with Debifi. We've been, people have been asking, why are you still in beta? I mean, you need to go like already. I'm like, no, we're gonna go through multiple things. We have phases, we have a plan. We want to do multiple security checks, security audits, internals, externals, and only when we're sure 100% we're going to go out of beta. Whether you're going to push me or not, it's not going to change anything. I mean, that's how you build good products.
I did the same with Bitcoin Archive, Within 3 months of starting Bitcoin Archive, I had more than 150,000 followers. I could have easily just branched out right then and there, raised external capital, hired a bunch of people.
Yeah.
But I didn't know the market. And it's a really good thing I didn't do that because, without really trying, I was approached by companies in the bull market, like, I would love to partner with you. And I thought it was just, this is just going to persist forever, right? And I didn't understand the tide goes out in the bear market and people stop spending almost completely, right? And I'm kind of glad I didn't ramp up everything and I just remained focused on one thing. And that was what I started doing. And it's really hard because I'm intellectually curious. I like engaging in like conceptually rich things and new things all the time, right? And I just continue to focus on Bitcoin Archive on Twitter and Twitter alone. And then once we got well into the bear market, it was only then that I sort of started to relax. I'm talking about 1.2, 1.3 million followers, right? Yeah. It was only then that I started to relax and I thought, I've actually built something, a brand now that will persist and I can start thinking about some of the other channels that I can build around it. And it was even still another 18 months before I launched the podcast, right? Because I wanted to do that in a really sustainable way. I didn't want, and I could have done all of that at the start. Like I certainly had the exposure and there was the hype of a bull market and everything. But for once in my life, I just wanted to do things in a really methodical, sustainable and careful way. Yeah. Rather than just rush at the opportunity and expand in all channels, spread myself thin, maybe hire some people who were not really optimal. Whereas the guys I've hired now, as it turned out, have been really quite perfect in terms of the mix of skills that we've got on board now, and we will continue to build on it. And there's some other things I want to do in other channels as well. But right now I'm like, okay, I'm going to get someone on board to do the breaking news for me. And, that's a challenge to find an ideal person because it's a very personal thing, right? Like I poured my heart and soul into this day and night, 16, 17 hours for nearly 2 years, right? At great personal cost as well. And so finding someone to do that, and then this is just going to be my absolute obsession for a time, including building out some other things. But I will pour myself into this the way I did on Twitter. So that will be my next obsession. But the sustainable path for growth is something that I've seen some Bitcoin companies follow. And while I've seen others who have basked in the limelight, they've burnt out as a result of that lack of focus. And I think that's a lesson for everybody.
I know some good examples. I'm not going to name the names, but it's like it's proven really. Like
we know they are.
Yeah, you rush, you do, and most of the time you just fail.
Yeah, I don't want to kick people while they're down, and whoever's down, I hope they rise again and learn their lessons. Like I don't want to see misfortune on people. I want to make that clear. I don't take pleasure in that at all. But it was definitely a lesson being new in an industry of quite acute cycles. I'm glad that I exercised an abundance of caution, which is at complete odds with the rest of my life and my personal disposition. I'm quite an optimistic person, but I'm happy I did that. Yeah. Max, thank you so much for coming in to talk with us.
Thank you very much.
It's been my pleasure to get to know you a little bit better because we've had a little bit of interaction online, but you never really know who you're talking to, and so it's good to have you in person and we can have that connection and get to know you a little bit better, and also your history with Honey Badger, Latvia, and life in Latvia as it's transitioned through different sort of economic and government structures as well. Thank you for sharing your story with us.
Thank you very much.
It's been a great pleasure.
It was a pleasure for me. Thank you for your time and opportunity. I'm really happy to do that.
We'll see you soon.
Yes, in Riga.
In Riga.
Baltic Honey Badger.
Baltic Honey Badger. See you there.
See you.
Thanks,
Thank
mate.
you. Cheers.
That was great, brother.
That was great.
Appreciate it. I really appreciate it.
Thank you.